Good evening, all. Ira Epstein with Financial Market Wrap-Up for this Friday evening. Yep, we're at October 14th, 2022, going into the long weekend. And this is your weekend edition, so we look at weekly charts. But when we look back at it, you had what's called a flash rally. You know, we hear flash crashes all the time. You had a flash rally yesterday. Market up, 900 points in the Dow, gives back today almost half of that, 400 and some odd points. What was it? Well, it was a sign you got too cheap. I know that that's the opposite of what people think, but that's probably what you did. You got down to the point where, like a rubber band, you pulled on that market, the S&P, the IWM, everything else, the Russell, boom, and the markets went there. Do we just go flying through the recent lows we made? Well, that's going to be the big question that people ask themselves. Sometimes the weekly charts offer a better story than the daily. So let's take a look and understand first. I'll go to a monthly chart on the S&P. There has been nothing friendly on this chart. How could you think anything's friendly as the market's been under the 18-month moving average and basically has stayed there? Nothing to talk about there. When you come to a weekly area chart of closes in the S&P, well, you got under it back here in August. You haven't looked forward since then. You had one little perp up early September and ever since under. What do I teach you in my charting course, the main charting course? When a market is under a main moving average, I consider the 18-day, the 18-month, the 18-week, the major averages. You should have a downside bias. Think of trading this way. You're looking at a chart picture. You get a buy signal. But what is your buy signal made of? How many filters do you have on it so that it meets that? Now, if you put too many filters, you never get a signal. If you have signals that fight with other signals, you don't get a signal. Example, I'll never understand why people will put a relative strength, an MACD, and a slow stochastic on the same chart. It makes no sense. For a classroom, maybe, you're just trying to see which one of the indices the measuring tools of momentum are doing better, but that's about it. Nah, it doesn't make sense. So pick your indicators very carefully. I picked mine with great care, and I've learned to hone them over the years, and I'm comfortable with them. It's the other thing in trading, be comfortable. The second thing, when we look at a weekly bar chart, just stand back and look at it sometimes. Well, there's certainly nothing bullish there. You have been falling, and you keep falling. You peaked out this year, the first part of the year, so the guys that were writing letters were going up. They weren't right. It's been down all year. That guy was right that said we were going to be bearish. The trend is clearly down. You've got a pattern of lower highs, lower lows. What's so bullish about that? Another thing, you had an outside week up last week. You took out that low. That was a bull trap. When you lay a bull trap, you always look to see underneath the market where's the closest main moving average or a Bollinger Band, because often you make a run towards that number. When I put on the moving average, we fell right into it, which is if you look at it, the 200-week moving average or other averages are up here. Bearish. What else? Momentum down, and you even went to the Bollinger Band for all purposes. You didn't quite hit it. You missed it by 3.5 ticks. Okay, I can live with that, but you're in that zone. So do I think there's a lot of downside from here immediately? I don't. I think that the market's going to try to give you another bounce. I think it's a chop affair, and I think you're looking to sell rallies in the market. Do not get suckered into selling breaks. Do not buy the rally. The market is punishing traders that buy the rallies. This is a bear market. This is not a bull market. This is not a market that has ended. This is a market that could have more legs to it. It's not going to be a 1, 2, 3. Where it'll end is when the Fed steps out of the market's way. And don't be the fool that says to themselves, well, this is where the Fed pivots. That's called a graveyard of pivot people. Okay? You don't want to be with those people. When it's over, you'll see it. It's going to be crystal clear. It's going to happen when we see the CPI number first stall. It's a lagging indicator. It's not going to first crash. It's going to first stall. Then you have to get a couple of periods in a row where it goes down, and then we start saying, that's when I care. Is the market getting confident? Who's the market? The Fed, not you. Is the market, the Fed, getting confident to say, okay, we can let up on the throttle a little bit? They're not going to go and just let go of that throttle. It will stay there longer than it should. It's the nature of this Fed. Volcker made the mistake. You keep hearing and reading about it. He took his foot off the throttle too fast. He tried to pivot. Everybody watched. They learned from it. Unfortunately, what they learned is how to stay too long. This is an art, not a science, that the Fed has to deal with. It won't be easy. And because they deal with lagging indicators, it's ugly. The biggest laggard is rent. Why? Nobody goes in and signs a lease for 3 months, right? You're signing a 1 year or a 2 year lease, typically. You're building in some type of escalation into the second year, typically. It's going to be based on what? It could be a CPI number, some percentage the landlord throws out. It's a laggard. It doesn't just go. So what they're going to look at are the new leases that come out. But you got to balance them. So they got to have an indicator there that takes into account, well, those are the old ones signed. Here's the new ones. Why rent? Because most people can't afford homes in this market. So rent is what does it. Does that make sense to you? That's how you got to look. So if last month they wanted to get, example, $4,000 a month, and this month they want to get a new lease, $3,900, yes, then you've got that pressure coming down. But realize where it came from. It was probably $3,000 a year ago. Maybe it went up 20% this year. Maybe it was $3,500, went up to $4,000. Whatever it is, understand how that works. Why rent? It's what the Fed seems to be talking about. I do this most simple analysis. I read what the Fed people do in my full research. I write 2 reports every day, Monday through Sunday. I start the first one, Monday through Thursday, 2 of them minimum. 1 Friday. I take Saturday off. It's not Sabbath, it's just I take the day off. Okay, so what happens? I read what they're saying. They're going to tell you. These are the voting members typically, the governors too, and they're going to tell you what they're looking at. Rent's a number they're looking at. Pay attention to that. When you take a look now at what's going on, when I see a market get down to the first time to a 200-week moving average of closes, to me, that's pretty important. Why is it important? It's a 4.5-year average. That's important. So when I have a Bollinger Band with it, okay, I can expect that's where the market has to make a key decision. Is it going to go through it like butter or give you bounces? Well, you know it gave you a bounce, but on the weekly chart, it stalled at it. That's really all that it did. When we take a look at the Dow, momentum is still down. Do I pay attention on a weekly chart to overbought, oversold? It's a funny thing, not the way that I do on the daily or a 15-minute chart or whatever other variable under a daily goes for. And the reason is, it seems that it pays more attention to overbought, oversold, maybe just because it's faster. This doesn't. So markets go up, markets go down. I typically don't like to put a new trade on over a 70 or 80 reading on a bull side in the slow stochastic or under a 30-20 for a new short. Got it? Those are my rules. I don't know that it's because it's overbought, oversold. I've just taught myself that. Okay. What if this market rallies? Well, I'd be in favor of looking at the short side of the market at 31,300. Okay, so from here, that'd be a nice rally. It's almost what? You're at 29,700. That'd be a 10% rally. I don't know that you're going to get it. The NASDAQ, fighting its battle, keeps hitting the 200-week average 3 weeks in a row. I know you're going to tell me it settled under it. Yeah, but it didn't close under the Bollinger Band. So how often do you close under a Bollinger Band? 5% of the time. Therefore, I've got these two. Now, it could easily end up, because of how this went here, that you start fighting a battle between the 200-week and that number. Is there anything bullish on this chart? Not in your wild dream. Ultimately, can you get a short sale up there? Yeah, but I did say at the beginning of this, I don't like selling when a market's under 30 or 20, and I don't like buying when it's over 70 or 80, right? Embedded's different. Well, you don't have it. And the same goes on, by the way. I'd be watching the other chart that we were just at right here, the Dow. As much as I like the idea of selling, I'll be looking. I'm not keen on selling it that way. When we come over to the Russell, I can see the big resistance. It's crystal clear. 1793.50 is the 200-week average, and 1840 is the 18-week average. That's your resistance point. To get there, you have to get through 1782.50. If it got there, I'd have potentially, no matter how you're going to look at it this week, a lower low and a higher high. It wouldn't be a trend, it'd just be a resistance point. Am I keen on selling the market under a 30 number? I'm not. Bye. 30-year bond, bearish. Do you remember the word gorilla glue trade? I throw it at you all the time. It's when a market decides to latch on to the Bollinger Band. Now, it is very rare, extremely rare, that you'll close more than 5 weeks in a row under a Bollinger Band. I'm not going to do the count here. I'll let you do it. But, you got a few, and then you get your bounce and right back. And, in fact, even on this week, you finished 122.8 under the band again and fighting it right there. This is entrenched. It's embedded, okay? When you get back over now, 129.12, it's a sign the relief is done on the downside. Until that shows up, there's more to come. And when these people all pick a number and they go, oh, you're at 4% on the 10-year as an example, be careful, blah, blah. Well, why can't it go to 4.25? Why can't it go to 4.5? Because they said so? I'm not buying into that. Any of them, by the way. Any of them. I'm a chartist. At the end of the day, this is bearish. The market will go where the chart's telling you. The chart knows more than the analyst. Yeah, the chart knows more. But where the analysts will come in, they'll go, if you get over 4.25%, it's really bearish for the market. Well, why isn't 4% real bearish for the market? I think it is. What's the neutral number the Fed wants to get to beat inflation? I happen to think it's wherever they got to cross the core CPI at some point. Core CPI is 6.3. So if core is going to start slipping down, it'll be wherever that neutral number is, where the Fed stops interest rate hikes and sits for a bit. I don't think they're going to stop at 4.5%, as in just making this up, all right, when core is over 6. I think they want to see the trajectory coming down in that, and they're lifting themselves up, and then they guess they're going to crisscross, and they'll stay crisscrossed. That's called the pivot. And I'm not buying that it's some other number. I think that's what they're going to tie into. They just look at that number so often. Maybe they have another number they look at. It'll still correlate into that core CPI. That's what I've learned. When I look at the dollar index, okay, so the dollar index is still embedded. Until it loses that reading, it ain't over. Does that mean it has to go dramatically higher through this number? No. What I tell traders, you get up to the upper Bollinger Band, you take money off the table? Absolutely. That's why at the end of this, you'll have that enhanced Bollinger Band course. Do you know how many daily numbers yesterday, before the turnaround, hit the lower Bollinger Band for the first time and gave you the turn? My God, if you took the course, you weren't in trouble yesterday. You were pulling in if you were a bear. And you're just yanking it in before that whole thing happened. Go look at it and you see if I'm right or wrong. In the euro, okay, it's the flip-flop of the dollar. You lost the embedded reading, the first step of it. First step. I like when it closes over 21, not 20. Now, the traditionalists don't use my slow stochastic settings to begin with, but they look at it that any reading over 20, you're turning the corner in the market, and that's why the traditional way, when you set up your slow stochastic, it's 80 and 20. That's where it comes from. George Lane created this. I knew George really well. He would be on my old show, Stocks, Options, and Futures in the 80s and 90s all the time. Loved the guy. He was like talking to Santa Claus. He had the beard, all the New Mexico jewelry. He was quite a character, but he was bright. And he developed this tool because he didn't like RSI and MASD. I was asking him. And then I made some twists and turns, and I said, George, I've come up with something that I like better, and here's why. And he said, Ira, if it works for you, it works. And he looked at it hard, and he said, you got merit to it, and that was it for me. And I did it, and I compared the two. I ran them for a long time compared to each other. I like my numbers better. And that's all that it is. So you're losing that. So if you lose the momentum, why do I want to be selling this on a weekly basis? I don't. I want it to either get back under the 20 number, both numbers, or I want to walk away from it for a little bit. This can be a turning point. In the Canadian dollar, Gorilla Glue trade, 1, 2, 3, 4, 5, 6. Every week, the market is on top of that band. This is your crush of the Canadian dollar. You'll know you've got an important low in place when the red line of the Bollinger Band closes over 21 with the settings that I give you when you're a subscriber to my research. Japanese yen, same thing. Well, everybody's bullish and they're saying, my work got you out here before this rally ensued up there. And then when it re-embedded, I have been one-sided in this market, bearish. Just plain bearish. Daily and weekly charts are looking very similar. Do you sell under Bollinger Bands? No. If you can't get a bounce away from it on your terms, you don't do it. But is there any reason to be long? Sometimes knowing what not to do is a win in itself. Bitcoin. To me, this was the week, and I had been short for my clientele. If you're a full subscriber, you were short via my writings, via what I put out in the morning videos. That's fact, okay? I can prove every one of those. We keep records of it. I said cover this week. This was the week to cover. You got down to, 17,810. I wasn't looking for the Bollinger Band. I was doing it off the daily charts. And the daily screamed at the Bollinger Band to come out. As it turned out, the market rallied back $1,000 in 24 hours from then. Wow, that's a lot. Now, what do you do with it? It's still embedded. It's still in the bear camp. It hasn't left it. But do you sell underneath Bollinger Bands? No. So on a good rally, this isn't good yet, I'd be taking a look. But remember, we were talking getting short 19,400. You're back to 19,1, but look what you got down to. The money was made, past tense, trade over. Bitcoin, Brent WTI. Okay, I saw the B and my brain flashed. Okay, the two have pulled back into price together. But what about the individual charts? Well, you've been in a downtrend, and I know that everybody's going, Brent is running away and all this. Is it? I read the newspapers and I start cracking up. What are these people looking at? Are they nuts? And it's because the media doesn't get it. You peaked out up here at 135. You've come down, and you've come down into a key support area towards the 100-day average. That is what the market has done. And it has to get up and close over the 18-week average of closes to tell you that this is anything more than a bounce. That's all it is so far. It's not in a trend. It stepped out of the trend a week ago, not this week, right here, a week ago, when it got over the 85-81 level. That broke that pattern of the recent lower highs, lower lows. It broke it right here again. It's worked itself in waves. Do I want to be short under that number, the Bollinger Band? No. Do I want to be short against that combination of the 100-week average and that? No. But do I have a reason to be long? No. What else happened? You lost the embedded reading. You made your run. That's what you're supposed to do. What'd you do here? You had an embedded reading. That's why you got to pay attention to this. You lost it right there. Market then picked up, gave you time, went for the 18-week average. All right. Is it a buy or a sell? It's neither. Not on a weekly basis. It's cash right now waiting to see. You're in gasoline. When you got down to the Bollinger Band, the 100-week average, I told you, the combination of a 100 and 200-week average with a Bollinger Band is often a deadly combination. When I redo my course, I'm going to use that. That's the phrase I'm going to use. And it's deadly because it's where the suckers are coming in. If it's on the downside, they're getting aggressive selling, and the market is saying, hold on, I need time. I got to decide what I'm doing there. Now, sometimes the 100 will give way, and it'll go to the 200 in it. But remember, you're under the 18 weeks, so the bias is down anyways. It's not a buy, but it's also flashing signals not to be short. 21.79 reading. The first time gasoline has said the odds favor unless the red line closes back under 20 next week, that before the market makes through these lows, it's going back to wherever the 18-week average is. It'll be under $3, but that's what it'll do. Just because of the nature, you're going to lose these higher numbers and replace it with lower numbers, how moving averages work. So you put that together and you get game plans. That's what you're always looking for. And we have to see what's going to happen. This was a real bad week. CPI did not do what so many people were hoping. It's a lag in it. We'll see what happens. But even the headline number didn't crash on you. And that takes into account more things than this. So we have to pay attention, let the market do its thing. November 2nd, it's, I think, a lock. You're going to get a 75 basis point hike. There could be talk if we get hot data between today and that time that the Fed even wants to do more. The odds of them going less, the only way that would happen, in my opinion, I said it and it's Armageddon, is if Russia did something with a nuclear tactical weapon. That could put the Fed going, what do we do now? Because the world's changed on you instantly. We don't know what the retaliation would be. Barring that, no, I can't think of a thing that stops the 75 point, but I can open the door for the 100. Now, open your mind, open your wallet for a small amount. We're not talking $100 here. We are talking, you're going to get a course, 13 videos. You're going to learn how to work with Bollinger Bands. You're going to learn the importance, and you're going to learn that when everybody's going one way and you're hitting that number, you're not with the crowd. You won't get it unless you learn this. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.